I think the market declines after we saw the trade truce last weekend has been a little puzzling. Not the fact that it came down, but the magnitudes of these declines, they are fairly large. We saw early signs that there was some early profit taking where we didn't get the clarity from both the US and China after the trade truce, and some signs that very shallow cut loss levels were being triggered as well. And again, this is not the time of the year where institutional funds would like to take on risks as well.
Yes, I think that timing is critical, and I do wonder to what extent the situation around the arrest of the Huawei CFO has made things worse, because you talk about you were surprised to see this reaction after the trade truce, but when those developments hit, many said perhaps this truce is not what we thought it was.
Yes, there are a lot of questions, I think, right now on the table, notwithstanding the lack of clarity regarding what the trade truce terms actually are, and also the Huawei CFO's arrest. On the other hand, we think that versus where we were 3 months ago, when both China and US were at a very hostile standoff, this is a significant step in the positive direction. More importantly, we think that the Chinese side is very incentivized to have a positive outcome to this set of negotiations after 3 months. The confidence levels in their economy is falling, and they are juggling a lot of balls in the air at this point in time. That being said, while we expect some sort of positive outcome from the trade talks at the end of February, we believe that broader tensions between these two countries could extend beyond trade. As we saw last month at the very acrimonious APEC summit with US Vice President Pence, these tensions between the two countries could go on for a while, and this worries us.
It's interesting, isn't it? Because that seems to be the assumption of the market, is that come what may with this truce, the tensions will be there. And I think the other question is how much damage has already been done. I mean, we look at other GDP prints, other data points even coming out of China, but also the GDP picture in Japan. You can't put all this down to global trade tensions, but surely that economy is so impacted as well. Do you think enough damage has been done already that people are saying we just want to sit on the sidelines?
Well, eventually this is, I think, shifting sands right now. So confidence levels are being affected by what's happening to trade, and ultimately this will spill over to GDP growth as well. And it is no coincidence in our view that we saw, a very serious bout of growth fears, followed by the inversion in the belly of the yield curve in the 5-2, right around the time where trade tensions are ratcheting up globally. And, over the longer term, you made a point about how tensions beyond trade could carry on for a while. And the China initiative that has been announced by the US DOJ is extremely worrying to us. So just to give a little bit of clarity, this new initiative is engineered to focus on Chinese companies that are allegedly violating US intellectual property laws, technology transfer laws, and allegedly carrying out espionage as well. So what we saw with Huawei could be the beginning of something that's more prolonged and more serious.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.